for life. Hi, good morning. Welcome to the Joy Business Report. Coming up, interest rates on the money market return to 30% bracket as government accepts all bids tendered for the T-bills. Also, Ghana's total export earnings decline marginally to $8.1 billion at the end of May. But should we be worried about this development? We'll find out. Also ahead, Ghana's debt level reaches 569 billion cedis. We hear from a former finance minister as he warns of dwindling private sector growth due to the growing debt stock. Details coming up. My name is Darryl Kwao. Thanks for being with us this morning. Also later in the bulletin, average lending rates fall by about 4% to 31.5% in June as the Monetary Policy Committee of the Bank of Ghana is set to announce decision on its key lending rate, the policy rate. We'll give you what to expect ahead. First, though, interest rates on the money market return to the 30% bracket as the government mobilizes more funds to finance maturing debt. According to the auction result by the Bank of Ghana, the government accepted all bids tendered for the treasury bills by the investors to the tune of 2.699 billion cedis.
The T-bill sale was oversubscribed by a marginal 1.70%, but a rising interest cost is a major concern to all stakeholders. The yield on the 364-day bill inched up to 30.04% from the previous 29.65%. VAT of the 91-day bill shot up by 0.39% to 24.92%. Again, the 182-day bill also escalated to 26.80% from 26.40% previously. In the first 4 months of this year, the government domestic debt went up by a significant 15.6 billion cedis. According to the results by the Bank of Ghana, about 1.785 billion cedis were tendered for the 91-day bill. All the bids were accepted. A little about 557 million cedis were, however, mobilized from the one-year bill.
That was a business desk report. Average lending rates fell to 31.5% in April this year from a high of 35.8%. This is equivalent to 2.625% per month on a loan charged by the bank. According to data from the Bank of Ghana, the average lending rate began easing in April as it dropped to 31.6%. This is surprising because inflation is high. However, the dip in lending rates may be due to the fact that the banks are diversifying their assets following the domestic debt exchange program with a focus on lending, which is their core business. Now, economist Dr. Priscilla Chimesi-Bafo is predicting an increase in the policy rate as the Bank of Ghana announces a decision on the key indicator today. This follows a recent hike in inflation, arguing the central bank should do more to control inflation. She tells Joy Business there must be the conscious effort by the Monetary Policy Committee to implement policies to control inflation from both demand and supply sides.
There's been a lot of backlash with regards to the fact that they should tighten. But consistently, if inflation is rising, then they need to tighten the environment. But within our circumstance, we also know that there are a lot of supply side issues. But when you track the data, you see that inflation begins to tick down. When monetary policy slows down on the tightening, it ticks up a bit. And so it's a dilemma, really. But
you had economist Dr. Priscilla Chimesi-Bafo. Another economist, Dr. Patrick Esume, is calling on the government to address issues regarding food production. According to him, food inflation has been a major factor in the continuous surge in the general inflation rate. He therefore wants government to invest more in food production to tackle the situation.
It's clear from what we have learned that last year the Bank of Ghana probably extended more overdraft to the government than anticipated. So in some sense, you should think that there should be some excess liquidity in the system. So on that score, I think trying to make more reforms to cut the extent of financing, the deficit financing by the Bank of Ghana will help. But I think at the same time, we really need to address the problems with food production.
You heard economist Dr. Patrick Esuming. Former Finance Minister Ted Tekwe has advised government to be cautious of the country's growing debt stock as it reaches alarming levels. The country's debt reached 569 billion cedis at the end of May this year. The domestic debt went up by about $15 billion. Mr. Tekwe argues that the country's debt level is not sustainable. Speaking to Joy Business, he said the debt level puts more burden on the citizenry, hurting private sector growth.
And we know that even as we are speaking today, we have so much, deficit. And we know that we are having difficulty financing it. We don't need somebody to come and tell us, because who are those who finance domestically if we do not have access, to the external markets? It is a mobilization which is done by the same banks, who buy the treasury bills, who buy the bonds, which are the subject of discussion. And we cannot, and so we know these facts, and the numbers are there. So I would say that since a reduction in expenditure itself limits the fiscal space, as has been said in the past, let us expedite it and go in the next, maybe even 1 month.
Former Finance Minister said Tekwe, speaking on Ghana's debt level, which has reached 569 billion cedis, domestic debt going up by about 15 billion cedis. Now, Ghana's total earnings from gold, cocoa, crude oil, and other exports declined marginally at the end of May. Data from the Bank of Ghana indicated that it stood at $8.1 billion compared to $8.8 billion during the same period last year. But should we be worried about this development? Here's George Yafe with more.
The data showed some mixed numbers when it came to what the country actually earned from these exports. Whilst earnings from gold and cocoa went up significantly compared to what we got in May 2022, the same cannot be said for crude oil as well as other exports. The Bank of Ghana's data showed that earnings from oil exports dropped from $2.8 billion in 2022 to $1.6 billion in May 2023. The total amount of money spent on the country's imports reached $6.4 billion. All the items captured under our total imports were declining, and that development that should get all of us smiling. This resulted in a trade balance of $1.7 billion higher than what we got in the same period for last year. For some, an $8.1 billion as total earnings for an economy like Ghana in the first 6 months of this year should get everyone excited. But if you compare this to last year, it was dropping. Again, looking at the recent pressure on the Ghana cedi, a huge increase should have brought some relief to all of us. Others are also worried that a significant amount of these earnings are not coming directly to the state or into Bank of Ghana's accounts, but rather private hands. Therefore, the expected impact on the Ghana cedi should be measured.
George, I feel with that report, let's turn to the commodity market for you. Crude oil selling this morning at $80 a barrel. Gold lost marginally to open trading at $1,960 an ounce. Cocoa went up by $27, trading this morning at $3,415 a ton. The National Petroleum Authority is finally set to implement the National Cylinder Recirculation Program from September this year after initial setbacks. This was contained in a letter to the LPG marketers cited by Joy Business. The new directive for marketing and distribution of LPG in the country seeks to ensure that the majority of Ghanaians have access to clean and safe gas for domestic and commercial use. The program will first be rolled out in the Greater Accra and Ashanti regions before it is extended to other parts of the country. Ghana is on course to implement its energy transition plan, which was launched last year. Even before full implementation, the country is in the process of getting an investor-friendly policy that will attract both local and international investors. Speaking to Joy Business after addressing participants at the just-ended GIZ Extractive Industry Summer School in the Western Region, Deputy Director of Nuclear Power and Alternative Energy at the Ministry of Energy, Dr. Robert Sugbaji, said all stakeholders are being engaged to make the transition process a successful one.
But before then, we have the intermediary part where we want to develop an investor-friendly plan with sustainable energy for all, and then we have to see how we could attract some investments into the implementation of some of the projects which are earmarked in the energy transition framework. So currently that is where we are. We've also attracted some investors supplement some parts of the energy transition. Currently, everything is, I would say, the implementation plan, majority of it is still on the drawing board, but we have to do some feasibility studies, some concept analysis.
You heard Deputy Director of Nuclear Power and Alternative Energy at the Ministry of Energy, Dr. Robert Sogbaji. Next, all eyes will be on the stocks of Fan Milk and Societe Generale. Let's take a look at how your shares will fare on the Ghana Stock Exchange this week. Here's Grace Munayim of Data Bank Research.
Last week, the stock market indices advanced on price gains in two equities. The bourse registered 4 price movers of gains in 2 financial stocks and 2 laggards. Standard Chartered and Ghana Commercial Banks gained 59 pesos and 10 pesos respectively. Access Bank and SIC Insurance, however, lost 7 pesos and a peso respectively. Consequently, the Ghana Stock Exchange Composite Index advanced 0.3% weekly to extend its year-to-date gains to